Good afternoon and welcome to Business Incorporated, coming to you live from Channel's television headquarters in Lagos. I am Bolaji Akinwale. Coming up, Nigeria's central bank launches the Naira-settled OTC FX futures markets. Financial markets volatility caused by Britain's decision to quit the European Union may hurt investment flows into South Africa. Plus, UK shares remain volatile in the wake of the Brexit vote, while the pound falls further against the dollar after Friday's record one-day loss. Okay, let's begin with the story that says that the UK has had its credit rating outlook cut to negative by the ratings agency Moodys after the country voted to leave the EU. Moodys said that the result would herald a prolonged period of uncertainty. According to the rating agency, Moodys said that the referendum result would have negative implications for the country's medium-term growth outlook, and it lowered the UK's long-term issuer and debt ratings to negative from stable. And many companies are likely to impose a hiring freeze following Britain's vote to leave the European Union. The Institute of Directors surveyed 1,000 of its members and found that a quarter planned to freeze recruitment. The results suggested that almost a third would keep hiring at the same pace, with 5% planning to cut jobs. Almost a third said that the vote was negative for their business. And UK shares have remained volatile in the wake of the Brexit vote, while the pound fell further against the dollar after Friday's one-day record loss. The FTSE 100 index was down 0.7% in early trade, although the fall was not as bad as some had feared. Sterling was trading at $1.34, down 1.8%, although this was above the low of $1.32 hit on Friday. And the pound had its biggest one-day fall against the dollar last week. And now let's cross over to Frankfurt to see how the market is doing after Brexit. Avi Aguedas, DWTV Channels TV financial correspondent, joins me now from the exchange. Avi, welcome to the program. I see the trading week started off with moderate losses, but has developed badly. How are investors in Germany tackling the Brexit hangover? Okay, we hope to get Avi ready for us on the program. Let's move on now. We'll get back to that story shortly. Still talking about stock markets in Asia, Japanese shares have managed to recover after the historic plunge last Friday following the UK's vote to leave the European Union. Traders have taken some confidence from a pledge by the Japanese government to stabilize the financial markets. The Nikkei closed up at 2.4% after losing almost 8% on Friday. Other markets in Asia traded mixed, but failed to reverse the Friday losses. Hong Kong's Hang Seng Index was down by another 0.5%, while the mainland's benchmark Shanghai Composite traded 1.2% higher. South Korea's benchmark Kospi finished flat at 1,926.85. Australia's ASX 200 in Sydney closed 0.5%. Both the Kospi and the ASX 200 had lost more than 3% on Friday in the wake of the UK's decision to exit the European Union. Okay, let's get back to Frankfurt, where Avi Aguedas is standing by to give us some updates as regards how the market is faring after Brexit votes. Avi, welcome to the program. Now, I see the trading week started off with moderate losses. Okay, we've seen how are investors really reacting in terms of tackling the Brexit hangover in Germany?
Well, we had a start to the trading session that was surprisingly good considering the circumstances. The losses were not that big, they just were very slight. But as the trading session developed, we are seeing deep losses now. The DAX, the main German index, is losing more than 2% as we speak. The most important areas that are being hit are the banking sector on the one hand, because let's not forget that uncertainty always has consequences in the financial world. So we are seeing Deutsche Bank, for example, Germany's largest banks, as one of the top losers of the trading session. And on the other hand, airline stocks are also being hit quite hard. That is especially because there is uncertainty on how the regulations that currently apply to air traffic will affect the airlines and their costs, which, as we know, are very sensitive in the industry. So those are two of the areas that are being most affected. All in all, we can say that until there are concrete solutions and steps being taken to formalize this process and to shed some light on how it's going to look like, we will continue to see very volatile and very sensitive markets.
Now, the shares of British banks, Barclays and RBS, have suspended trading after deep plunges. What does this tell us about the outlook?
Well, it tells us that what investors are now trying to figure out is where to put their money, where to invest. And of course, the banking sector of Great Britain, all in all, will suffer from a possible Brexit, or from when the UK actually leaves the European Union. We can distinguish between short-term and long-term consequences here. This is definitely more of a short-term thing because uncertainty now is very big. That's why everyone is looking at the government of the United Kingdom in order to see which steps they're going to take. Again, especially in the financial sector, and there is a very critical situation for all of the banking in Europe right now. It's not only in the UK. In Italy, one of the countries perhaps more susceptible to a possibility of leaving the European Union as well. The banks are also plunging very, very deeply. The Unicredit, the most important bank in Italy, is losing about 7%, and the Italian government is even considering to intervene. So the situation for the banking sector, which is always the first sector being hit by any financial insecurity, is suffering the consequences right now.
And British Finance Minister George Osborne broke a silence before markets opened and tried to calm down the markets today. How much impact did his speech make on investors?
Well, let's say the good part, as you mentioned, is that he broke his silence. Everyone was wondering why the top politicians in the UK, and especially the finance minister, was not stepping up and telling us something about how he saw the situation. Now, his words were not really enough to calm the moods down, because on the one hand, we know that the UK's economy is going quite well, but we also know that the outlook is rather bad considering the situation, and there are some agencies, some banks that have already either downgraded or cut off the prospects for the British economy in the near future. So we know that there will be some rough times ahead, despite the fact that the country is financially stable. And the other problem, perhaps, for investors is that there were no concrete measures announced to shore up the economy. What investors want to hear and see from the British government are concrete actions, probably stimulus programs or money being injected into the economy in order to make sure that these times can pass by without any very big impact. So unless we hear those actions, investors were not very convinced, and that's what we saw today.
Alvia Aguilas, DWTV Channel Civic Correspondent, thank you. Okay, let's take a look at the currencies markets in Japan, where Prime Minister Shinzo Abe has instructed Finance Minister Tatsuo Aso and Deputy Bank of Japan Governor to take steps, if necessary, in the wake of Britain's historic vote to leave the European Union. Abe summoned Aso and Nakasu to an emergency meeting in the Prime Minister's office to discuss how to deal with the market turbulence caused by Brexit. The yen briefly soared above the key threshold of 100 to the dollar on Friday as investors hoarded the safe haven currency after the Brexit vote, adding to headaches for Japanese policymakers worried about the effects a strong yen could have on exports. We'll go on a break, and when we come back, we'll tell you what transpired at the launch of the Naira-settled FX futures market at the FMDQ OTC Securities Exchange. Please join us again.